I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Colorado. Thanks for being on the show, Rick.
Well, thanks for inviting me, Jim. Always a pleasure.
The Wall Street Journal is concerned about dying volatility on the markets, but is that a real danger sign?
Well, it's interesting. You know, the market has sort of settled into what you might mistake for complacency, but for the fact that everybody's paying up for insurance right now against the big event. You know, we're all looking for something seismic to happen in the market, and it's guaranteed that it will happen. It just doesn't seem to be happening on anybody's schedule or based on any kind of logic that relates to the real world.
With people waiting like this, does that mean they're taking their money out and waiting on the sidelines for something to happen?
Yeah, they have been withdrawing from certain instruments that make money when market volatility falls. And as I mentioned, conversely, that has the effect of pushing up the cost of insuring against the big event that we all know is coming. We know it's coming because the market, by even the criteria of a perma bull, has taken leave of its senses. You know, we have a real downturn starting to occur in the housing sector, and it began quite a while ago in the auto sector. So with two key industries rolling down, we've got the broad averages near record highs, and we've got these what I call the lunatic stocks, sometimes referred to as the FANG stocks: Facebook, Amazon, Apple, Netscape, Google. They are in the stratosphere, and still worse, they are really responsible for most of the gains in the S&Ps over this year.
Well, with everybody being fascinated with the FANGs, is there anywhere else to go?
I keep saying that bonds are the place to go, and you'll know over the years that you and I have talked that I haven't wavered, that I think that the Fed's bluff, it's all a big hoax about tightening to head off inflation. There never was going to be an inflation, and there never really was much of an economic revival. You know, we had the crash of 2007 and 8, and financial assets have certainly come out of that crash pretty nicely, and housing is back to the bubble conditions that existed in 2006, 2007. But the real economy, you know, Main Street, you can see that they're still in a wallow, and anybody you know who's got a business, if you know the owner, we're all kind of struggling just to keep our heads above water. It's not like we're in boom times. Only the financial markets are booming. So all along, you just had to bet against the Fed. And that took a toll, really, until a few months ago, because the bonds corrected very seriously. But I think now it's all upside, because you not only have bond prices, which are going to rise as yields fall, because we're headed into recession, but you've got a kicker there, because all the bozos who essentially bet with the Fed, they swallowed this malarkey about the Fed tightening. The Fed was never serious about tightening, but they're all going to have to unwind their bets. So that's going to kind of turbocharge the rally that we have in bonds. And the vehicle I suggest to play that is an ETF that trades under the symbol TLT. So if you put TLT on the weekly chart, I know I can't, I can just talk about this, but when you draw a channel for TLT, we've just come off the bottom of a channel that leaves room for an enormous rally So it's really just beginning, and it's going to reflect the fact that this whole business about Fed tightening was just a hoax. It was a big lie, and so many people bought into it that they're going to have to reverse their bets.
We'll have more with Rick Ackerman right after the break.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're chatting with Rick Ackerman. Rick, is there a particular stock that you're watching that's kind of a bellwether for what's going to happen?
Well, there's no question in my mind about that. You know, I think Amazon is the only stock worth paying attention to. It's just kind of stripped down for action. The irony of Amazon is that even though the company is putting out of existence many brick and mortar businesses, Amazon is really a primary instance of brick and mortar retailing because, yeah, they do their business online, but it requires delivery infrastructure, trucks, anything from trucks to drones, and also a lot of warehouses. Amazon is taking over a lot of dried up big box mall spaces and things like that to establish shipping centers. So Amazon winds up being a very brick and mortars company, and because it does business on a global scale, I think it's really the important stock to watch. So I'm paying very close attention to hidden pivot targets. That's my technical method. And the last rally in Amazon brought it up to within a point of a target at 1018 that looked pretty important to me. But if Amazon gets decisively above 1018, meaning it closes above that number for 2 consecutive days, or trades more than $5 or $6 above it, 1023, 1024, I think the stock's going to go to 1083. And of course, if Amazon is rising, the broad averages at worst will just be going sideways to, wafting higher. So I think you need only watch Amazon to get it right.
Now, one time when we talked about Amazon, someone said it would take 300 years to get back your investment. Do you still buy that?
Well, when you talk about price earnings multiples, a lot of the yo-yos that think that fundamental analysis means something, they miss the whole point. Multiples we could have market multiples of 30 times trailing earnings or forecast earnings or whatever, but it's really just a state of mind. The market multiple is simply a reflection of the degree of mania or depression that exists at any given time. It's just a psychological construct. So, so I don't pay much attention to it. I just kind of look at the charts, which give me what have been some pretty good price targets.
Are people in the U.S. holding on to their cash because they don't know what's going to happen with their health care?
Well, there's no question that health care is just kind of a big cloud hanging over household budgets. With all the blather about, reforms under Trump, the debate in the Senate seems to be, well, why should we even consider this so-called reform if premiums are going to keep going higher, and there don't seem to be much in the way of checks and balances on these ridiculous rate increases that all people are experiencing with their health care insurance. So it's such a big part of household income. Some people put 20% or more into healthcare premiums, and heaven forbid they should get stuck paying these ridiculous deductibles that go up to as high as $15,000 or more for families. So yeah, when you put a big question mark over the entire economy in the form of the question, what's it going to cost for healthcare next year, that is a definite, it has a damping effect on the economy.
Do you hear any mumbling out there that the proposed healthcare bills in the U.S. include giant tax cuts for billionaires?
Oh, I don't buy any of that. Whenever I hear the word billionaires in connection with tax cuts, nobody should be fooled, really. It's just us working stiffs in the middle of the middle class that are paying through the nose. And any time, we hear talk about reform so that the rich pay their fair share, the only way you can really raise more revenues by through tax policy is to hit the meaty middle, the middle class. So, we should tune out this word billionaire. They're not going to bail us out.
We'll have more with Rick Ackerman right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Rick Ackerman. Rick, what's happening with gold right now?
Well, I think it's in a holding pattern that I would call constructive. It looks to me more like consolidation than distribution. But, from a technical standpoint, each and every rally we see in gold gets me exactly to some threshold where I'm thinking, geez, this is starting to look interesting. I'm even getting a little enthusiastic. And then, lo and behold, the rally dies. The last time it happened, it died within 20 cents of what I call a midpoint hidden pivot at 12.99 and change. So gold sort of takes you right to the threshold where you want to start liking it and trusting it again, and then it falls apart. And again, from a technical standpoint, when it falls apart, it comes down to some threshold that leaves you maybe just, one step short of despair. So, when you put those things together, you begin to see that anybody with an interest in gold, speculators, traders, we're just being teased. But again, I think it's teased with an eventual resolution to the upside.
Is oil going to recover this summer?
It's going to recover to maybe, the target we've talked about is below 30. That's where I think crude is headed. It's having a little rally today. I wouldn't pay it much heed. In the context of what we were talking about earlier about the U.S. economy headed into recession that will, I think, be statistically validated by the end of the year, where can oil prices go? And the main, the story we've been hearing for the last couple of years is an obvious fraud because it's all been supply side stories. It's the ridiculous idea that you could somehow have a bull market in crude that happens simply because there's a curtailment of supply. And putting the story aside, there hasn't been that curtailment. These producer oil is fungible. If one producer isn't putting it into the market, another will. They all kind of take advantage of each other, so there's no real cartel. And even the Saudis can't make the quotas stick. So here we've had this absurd story that somehow we were going to have a bull market in crude because of curtailments in supply, chaos in Venezuela that would throttle, crude oil supplies from that source, or, revolution in Iran or some sort of policy change in Iran that shuts off the natural gas spigot. So as I'm sure everybody must realize, if they thought about it, that's not what creates bull markets. Bull markets are driven by an increase in demand, not spun stories about curtailment of supply. And for an increase in demand to occur, you need the world's largest buyer at the margin, China, to start. You need their manufacturing economy to start really percolating, and we all know that ain't happening.
With China's slowdown, how does that affect all the different commodities?
Well, it cuts across the whole universe of commodities. China is really the biggest buyer at the margin of pretty much everything, of all raw materials, energy, and everything else. So when China gets the sniffles, the world catches a cold.
Now, I've heard that because of high real estate prices in the major cities in China, people are now actually moving into those big, giant, empty cities because that's the only place they can afford to buy.
Well, that's interesting because those cities don't have any infrastructure. Jim Rickards, in one of his books, he wrote brilliantly about these ghost cities in China and how the whole idea of build it and they will come is completely wrong, because it turns out that city growth is organic, and if you build a couple of big buildings and you label those buildings as for research and development, well, if you don't have the feeder streams, if you don't have universities to feed into the R&D buildings, then it just doesn't happen. So you really can't centrally plan a city in any way that would make it an efficient use of capital. So I don't know about people moving into those cities because it's just the cheapest place to live, but without the infrastructure, they might as well be tent cities like the ones we had during the U.S. Depression.
Rick, anything else you wanted to add on the markets right now?
Well, we had this front page story on volatility wasting away, the market seemingly complacent at a time when everybody knows that what's going to hit the fan. So I've got two numbers to put out there for you. The vehicle that I use to trade volatility is an exchange-traded fund, an ETF that goes under the symbol VXX. And we've dodged the bullet by not jumping on this thing as though, it were going to turn tomorrow. But I think that VXX, which is currently trading in record low territory around 12.24, I think it's going to come down to at least 11.73 before it turns around. And if it doesn't turn within a few pennies of that price, it could come all the way down to 11.27. But I'm pretty confident that one number or the other is going to mark a very important low for VXX. And of course, if VXX is ready to turn around and rally with a vengeance, then that means that the broad assumptions, the conditions that have fed the bull market in stocks, and for that matter, the tedious consolidation in gold, those things are going to change. So whatever markets are doing now, things are going to change. With the exception of the bonds, I think the long-term bonds in the U.S. took an early leap to discount the blather from the Fed about more tightening this year. Anybody who believes that deserves what's coming.
Rick, thank you so much for chatting with us.
Well, thank you for inviting me on, Jim. Always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from Colorado. And by the way, happy Independence Day, Rick. We won't be speaking before we go and blast off the fireworks.
Got my fireworks all ready to go, Jim.
You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.